We hear this name again and again through news channels in recent times, that is Adani Group. Yeah, here is the one more news about Adani Group. It repays shares back financing worth rupees 7,374 crore. We know the controversy that hit Adani Group. On March 7 announced that it has prepaid the rupees 7,374 crore, which is more than $900 million share backed financing made by various international and domestic financial institutions, about 2 years ahead of its latest maturity date. The conglomerate pledged to prepay all remaining loans by the end of March. The repayment will release pledge on shares of promoters in 4 group companies. This move is a part of a plan to cut overall promoter leverage backed by shares of Adani's group listed companies and repay all share back financing by March 31st this year, irrespective of later maturity dates. The repayment of the massive amount will allow the release of 4 of the group's listed shares, that is 155 million shares of Adani Ports and Special Economic Zones, and 31 million shares, which is 4% of Adani Enterprises Limited, and 36 million shares, that is 4.5% of Adani Transmission Limited, and finally 11 million shares, that is 1.2% of Adani Green Energy Limited. Let's listen this carefully. Here is the important statement said. In continuation of promoters' commitment to reduce the overall promoter leverage backed by Adani's listed company share, we would like to inform that we have prepaid share back financing of rupees 7,374 crore ahead of its latest maturity in April 2025. The statement said. Together with the repayments made in February, Adani Group has now prepaid about $2,106 million of share back financing. Incidentally, the development comes right when the conglomerate starts its lineup of road shows in London, Dubai, and across the US. Roadshow tour might be an attempt to boost investors' lost confidence both at home and globally after the shares of 10 of the group's listed companies went on a downward spiral following a scathing report by US short seller Hindenburg Research. If one can recall, Hindenburg Research reported substantial debt levels at Adani Group in Jan while claiming that the group has engaged in accounting fraud and used offshore shell companies to push prices up. The report gained the attention of investors, especially because just a few months prior, in September 2022, CreditSight, a Fitch Group unit, claimed that the group was deeply over-leveraged as it used debt to expand its port-to-power empire. Although Adani Group was quick to defend itself and refute the claims made by Hindenburg, about $135 billion of market value was wiped off in the month from Adani Group's listed companies. The group is now focusing on slow and steady recovery as scrapped rupees 7,000 crore coal plant purchase, dropped big for stake in energy trading firm PTC, and cost-cutting initiatives stand witness. Remarkably, in the last 4 years, Adani's group gross debt has doubled, with almost $2 billion worth of foreign currency bonds approaching repayment deadlines in 2024. The gross debt has ballooned from 1.11 lakh crore rupees in 2019 to 2.21 lakh crore rupees in 2023, according to a presentation made to investors last month. The net debt after including cash stood at 1.89 lakh crore rupees in 2023.